fam. You're welcome to day 11 of the 30 days no grief for ICAN challenge. Today is a very important day. Other days are important. Every single step and every single section of your ICAN case study report is actually important because everything sums up to 100. But today we're starting the 64 marks section because your requirements actually cover 64 marks. So we're going to start talking about the 64 marks section. So make sure you watch this video to the end. And if you have not subscribed, why? Yeah, hit the subscribe button. Let's dive into the video. Financial statement analysis. So financial statement analysis, the first thing you should know before we even dive into definition and all of that, the first thing you should know about financial statement analysis is that it's the analysis of the immediate past of the company. Now, what does that mean? So is it possible for you to see now in 2024, we're in April 2025, pardon me, right? April 2025, is it possible to see a company that has published financial statements for 2026 or 2027? I'm not talking about budget though, like proper published financial statements. Is it possible? No. Most times, in fact, all the time, except the budget, financial statements that are provided are usually for the past. Like now, for instance, we're in 2025, so the full year financial statements that you can see for a company would most likely be the one that covered the activities of 2024 or 2023 or any year that was previous. But for this new year, you cannot find it. They have to finish the year before they publish their statements. So that's why we say in financial statement analysis, the analysis of the past of the company. So in this case now, the financial statements they're providing you with is the financial statements that contains events that have occurred. So things that have happened, like the revenue they're providing you with is the revenue that have generated. The costs they have incurred it. So financial statement analysis, the first thing you should know is that it's the analysis of the immediate past of the company. Financial statement analysis is the analysis or evaluation or review of information on the financial statement of a company. So you have financial statement line items, you have revenue, you have costs, you have profit after tax, assets. So the analysis of those line items on the financial statement of a company is what we call financial statement analysis. So just like the name implies, you're analyzing the financial statement. Check the description for the link to register for the class. The purpose of financial statement analysis is basically to identify the areas of weakness and the areas of strength of the company. So what you're basically doing is that you're trying to say, okay, based on the information provided, is this company strong? Is it financially strong? Is this company weak in terms of does it have enough financial capacity? It's just like when they ask you to say, okay, between Mr. A and Mr. B, who has more financial capacity? Of course, you will check, does Mr. A have money? Who is making more profits in his business? Who is owing more debts and all of that? So that's what we do. So financial statement analysis is basically you analyzing those line items to check if the company is strong or if the company is weak financially. The first thing you can do is by assessing the trend in performance. So you will check, okay, how has this company been performing in terms of their trend? Okay, as this company, do they have, just like you have in economics, you have upward sloping curve, downward sloping curve, and the likes. So in this case, when you're trying to check, okay, this company, have they been improving? This company, has their financial capacity, has it been improving? Has it been coming down? Is it declining? The second way you can check is by checking the ratios, using ratios, checking the profitability of the company. Who is more profitable? Who is this company more profitable? Is it doing better in terms of what the previous years and this year? You can check, okay, in terms of liquidity, do they have enough money? You check, okay, are they owing more debt? Are they geared? The first one is the trend analysis and the second one is the ratio analysis. So just like we said, that the purpose of the financial statement analysis is to identify areas of weaknesses and areas of strength. And we made mention that the way you can do this is by assessing the trend in performance and by using ratios to actually check profitability, liquidity, and the likes. So in the same vein, that is why the tools that are mostly or commonly tested are trend analysis and ratio analysis, because trend analysis and ratio analysis can best be used to assess the weaknesses and strengths of a company. So it makes sense now, right? So I actually created videos where I explained how you know his trend, how you know his weaknesses, how you know all these methods. So I'll put the video in the link to the video in the description box. You can just check that out. And secondly, I also created videos on trend analysis and videos on ratio. I created a video on trend analysis and a video on ratio analysis, how to know, how to calculate. So you can check out those videos. Everything, I'll put it in the description box. You can check that out. The common narrative is that requirement one is usually the financial statement analysis. While that is true, if you check the trend of questions, at least 10 diets or thereabouts, that has been the case. The requirement one is usually a financial statement analysis question, but I don't want you to cram it, because what if I can decide to change the whole game? So how do you know? So the first thing major thing is you check the requirements. Is this requirement centered around a financial statement? For instance, you can have a requirement like assessment of the 2028, let me recap. Assessment of the financial statement of XYZ Limited from 2018 to 2020. That's basically, that requirement is centered around a financial statement. Or you can have something like, please draft for my review a report that comprises of the review or the evaluation of the profitability, the financial strength of XYZ Limited from 2018 to 2020. Now, how do you assess profitability? How do you assess liquidity? By what? Checking the profits, by checking the liquidity. And how can you get that? By looking at the line items on the financial statement. So any requirements that is driving you, or any requirements that you would need, that would require you to go to the financial statement to actually take figures and solve, or let's just put it like this: any requirements that the solution can be found by drawing figures from the financial statement, then what are you doing? You are analyzing the financial statement. First thing you do is check for the data provided. So most times, in fact all the time, just before, after, when the first page of your unseen, they will give you a list of exhibits. So the list of exhibits, you will have information that will tell you what's the content of the unseen and the pristine. So check it out. So check your requirement very well first. In some cases, in fact all the time, they'll give you a financial statement in the pristine, but sometimes it's not always required. How will you know if it's always useful? How will you know if it's useful or not? Check your requirements. Don't always say, oh, because some people always believe that the financial statement in the pristine will not be useful, because some diets have been like that, where they gave their financial statement in the pristine, and when they got to the unseen, they actually gave them a new financial statement entirely, and the one in the pristine was not useful. But don't always assume that once you have a new financial statement in the unseen, that the one in the pristine won't be useful. While that has been the trend, don't cram it. Check your requirements. If your requirement is telling you to do something that will require you just using the one in the unseen, then use it. Well, check your requirements very well. Don't cram. Most times when they give it a new financial statement in the unseen, that is the one that you are to use. But don't cram it like that. Check it. Check your requirements. So how do you carry out this episode? The first thing is check the data, check the information provided, check the financial statement they are supposed to use. Okay, is this one, based on the requirements, is it the one in the pristine, or is it the one in the unseen? Or if they don't give you anyone in the unseen, is it just the one in the pristine? Just check for the data or the financial statement that you are to work on. After doing that, go to your appendix section and calculate. All your calculations should be in the appendix section. When you are done with that, you move on to the body of your reports. That is where you would now interpret, okay, gross margin is improving, is declining, all those stories, put it in the body of your report. And then don't forget, conclusions and recommendations must also be part of your of your report. So this is how you can carry out the steps. So let's just recap. The first thing is check for the financial statement that you're going to need. The next thing you do is perform the calculations in the appendix. When you are done with that, go to the body of your report and interpret. And finally, include conclusions and recommendations. So the big question in your head is now that how do I do this? How do I actually calculate? How do I put it in the body of a report? don't worry about it. So I also created a video that covered everything on financial statement analysis, even with practical examples. So I'm going to still, just in addition to the ones I said I'm going to add to the description box, I'm also going to add the link to those ones, those videos where you can learn the practical aspects, how you can calculate, how you can put it, how you can prepare the body of a report. I'm also going to put the links to the video in the description box. You can go and watch it and learn more. Please learn this mistake very, very well, so that what you will not be a victim. So the first thing is what's not reading the second email. So usually in the ICAN case study question, in the unseen section, they'll give you two emails. The first one, that's the first exhibit, will contain the requirements, and the second one will contain further information, further instructions. Although it's not all the time, because November 2023, they did not, it was only just one exhibit, one email. But read the second email. Most times, why students actually have issues with understanding the requirements is because they don't read the second email. So if they give you two emails in the unseen, don't just say, oh, what's my requirements? Know your requirements. Any other information is useless. No. That second email is where they break down the requirements to let you know what they actually want you to do, and they give you more information. You understand? So please read the second email. So that's the first mistake that people make. The second mistake that people make is using the wrong technique. Please go to the description box now. If you don't know how to distinguish between a requirement that is covering trend analysis, a requirement that's covering ratio analysis, go and watch that video. Methods of identifying the suitable words, how to identify the suitable methods that you can use. Please go and watch that video. It's going to help you, because using the wrong method has really been a very, very big issue that many students have been facing. So using the wrong technique is a very big issue. And that thing again is what? Having right calculation and poor interpretation. In fact, some people don't even have right calculation. The calculation is utterly wrong. But some people even have correct calculation. I've had students like that actually had, like, their calculation was top notch, like 100% accurate. But interpretation was very poor. Your calculation, no matter how beautiful you calculate, is 8 marks. You cannot give you more than that. Appendix is 8 marks. It's the body of a report that carries the bulk of marks, 32 marks. You understand? So it's not just about calculating right, it's about what? Interpreting right. So go to the description section now and watch that video where I explained the practical aspect of financial statement analysis. Now, another problem or another mistake that people make is what? Not linking the appendix. Yes, not linking the appendix to the main report. So in your main report, just like, let me have a statement. The gross margin increased from 5% to 10% between year 1 and year 2, in brackets appendix 1. That thing you have done alone carries marks. Did you know? Now you know. So don't make that mistake again. Another mistake again is what? Not including conclusions and recommendations. Conclusions and recommendations also attract marks. So you must include conclusions and recommendations in your report. So make sure you do all these things. Then finally, this is just something I want to add. Not having a good paper structure. The structure I'm talking about now is not, move from cover page to executive summary, from executive summary to introduction. No. Even in the body of a report, your work is just messy. You are talking about gross margin now. You move to net profit margin, you move to ROCE, you come back to gross margin. Even you say, it's okay, read this report and tell us what you mean or what you're trying to communicate. Even when you read it, you cannot really even, it's not flowing. And examiners too, they have to flow when they're reading your report. So ensure that you structure your report well. Have headings. Headings actually attract marks. Yes, marks are awarded for headings. So please have headings. Don't just start. We don't even know which one is your executive summary. We don't know how to distinguish your executive summary or introduction. We don't even know which one you're even doing. Have headings, please. If you want to do financial statement analysis, have a heading. Evaluation of the financial statement of 2018 and 2019. So that we know that what you're about to say now is what? Financial statement analysis. If you are doing executive summary, have heading, executive summary. If you are doing introduction, have heading, so that anybody that is marking your work can know. And don't mumble everything up. Say, let me manage space. If you need extra sheets, they will give you. So make your work neat. So those are the common mistakes that students make, and it makes them to fail. So, but now that I know that you're not going to fail. So please take note of these things. So if you want to learn more about financial statement analysis, you can just check my check the description box of this video, and if you have any question, drop it in the comment section and I'll be there to attend to your question. All right, so see you tomorrow. Bye.